Welcome back to Global View News, your in-depth analysis of world events and their impact on the United States. The United States economy is currently in an interesting position, showing surprising resilience but filled with mixed signals and potential geopolitical risks. For those of you 50 and older, understanding these movements is crucial, especially as they relate to savings, investments, and the cost of living. We'll dissect three key areas: economic growth, Fed policy, and the practical implications for your wallet. Let's start with a key health indicator, gross domestic product, or GDP. The latest figures from Q2 2025 show that the United States GDP grew by 3.8% annually. This is the strongest performance we've seen since 2023, effectively defying all previous recession predictions. The main driver behind this strong figure? The American consumer. Consumer discretionary expenditure, PCE, was revised up significantly, confirming that Americans still have purchasing power. However, this momentum is not expected to last. Consensus projections predict that growth will slow to around 2.0% to 2.1% going into 2026. This signals that the effects of past monetary tightening are beginning to be felt and that the pace of economic acceleration has peaked.
Investors and analysts remain focused on the United States Central Bank, the Federal Reserve, or the Fed. The Fed's goal is to strike a balance between inflation and the labor market. Recent data shows that the U.S. annual inflation rate has fallen, hovering around 2.9%, approaching the Fed's desired 2% target. This is good news. However, more significant is the Fed's move regarding its benchmark interest rate. The Fed recently began a policy easing cycle, cutting its benchmark interest rate to a range of 4.00% to 4.25%. What does this mean? This cut suggests that the Fed now views labor market weakness as a greater risk than the threat of inflation. Although inflation remains, the Fed appears prepared to ease borrowing costs to prevent further unemployment. Markets expect further rate cuts for the remainder of the year. Now let's discuss how all this global news affects your retirement and investments. As an older audience, you likely prioritize safe assets. Here's what you need to pay attention to: gold prices and safe assets. Geopolitical tensions, particularly the re-escalating trade war between the US and China, have made gold a very attractive safe haven. Gold prices have risen significantly this year. This signals that global investors, including central banks, are seeking protection from uncertainty. Use Visual 1 Gold Rise chart. Treasuries. For those of you allocating funds to fixed income, keep an eye on bonds. The potential for further interest rate cuts by the Fed is likely to raise bond prices but lower future yields. You need to reevaluate your allocation strategy amid this potentially lower interest rate environment. Besides investment, the biggest hit is daily expenses. Stubborn services inflation. It's important to understand that the current strong spending by U.S. consumers is driven more by the services sector, namely rent, travel, and especially healthcare costs, than by goods. Inflation in this services sector is more difficult to reduce than that of goods. This means that even if headline inflation slows, the cost of essential daily living will remain high, squeezing your purchasing power. Global energy prices. Don't forget the impact of energy. Geopolitical conflicts or sudden decisions by oil-producing organizations like OPEC Plus directly affect global crude oil prices, which of course impacts the price of gasoline at the pump and your heating/cooling bills at home. In conclusion, the American economy has shown surprising resilience, fueled by a strong consumer base, defying gloomy predictions. However, the Fed's decision to begin cutting interest rates suggests they are seeing signs of weakness that need to be addressed. For you, viewers of Global View News, this is a time for balance. On the one hand, markets may favor lower interest rates. On the other hand, geopolitical risks, from trade wars to stubborn services inflation, remain a major concern that could erode the value of your assets and your purchasing power. Stay alert, and we will continue to provide in-depth analysis to help you navigate these global markets. See you in the next report.
Your support is crucial to us. By subscribing, you not only gain access to this exclusive analysis, but you also help us continue producing important and insightful global news content for our community. Subscribe now, and let's continue understanding the world together.